Good morning, everyone. It is Monday morning, or what I refer to as Money Monday. Hey, the question we're going to explore here in our pre-market prep here is, how do I get my week started trading, or what is my daily routine or my morning routine as far as starting the week trading? Whether or not it's full-time, part-time, I don't really distinguish between either one, but what is it that you do in the mornings? Okay. I get myself some coffee. I get up, I turn around and I turn on the TV. I do watch CNBC. I know one of the things I don't really, I watch the news, but I try not to, put it this way, I try not to let that influence my decision on the day. The biggest thing is taking a look at what the markets are doing, what they're open at. And it all starts on Sunday night at 6 p.m. Eastern time here. I'm in Ohio, so I'm on Eastern time. So at 6 p.m., the future markets open up Sunday night. And I typically jump on online, and I take a look at the future markets. I take a look at the futures to see what it is that is going on. And then I turn around and I also begin to develop some type of watch list. And sometimes it's mentally sitting there and mentally thinking, okay, what's some stocks that I want to look at? And a lot of times I'll do that in the mornings, and I'm just watching that on my phone and everything. So let's go ahead and jump into this week's episode, or this week's or today's pre-market prep, and let's talk about how I start my week. All right. Okay. Hey, before we do, I got to get a sip of coffee. And with that, everybody should know, if you've been following my videos. If not, I am not a financial advisor. I do not give financial advice. In no way, shape, or form should anything I discuss here be misconstrued as financial advice to either buy, sell, or trade any type of security in any way or option. And stocks and securities have risk, just as options have risk. You can lose every penny of your money, and the market giveth and it taketh away. And it takes it away much faster than it gives it. And it's easier to lose your nut on money than it is to make your nut on. In other words, it's easier to lose the amount of money you want to make for that week than it is for you to make that amount of money. Okay. On a consistent basis. I can consistently lose money. That's not a problem. But to consistently make money, that's a different story, and takes a lot of hard work. And I believe it starts right here with pre-market prep. These videos are part of my trade journey. They're part of my trade journal. I do this as part of my own education. I also add a play-by-play to these, and so I can go back and review these. And that's where I start this video as far as how I start my week. I do go back and review my weekly progress and my play-by-plays on each day of the week. I take a look at all these, and I look at where we were for the week, closing pre-market preps for each week that day. And then I take a summary, and I take a look at my P&L, and I take a look and see exactly where exactly what we've accomplished for the week as far as the goal. Are we ahead of our goal, or are we behind the goal? No, we just pretty much finished the month of September. So today's the first Monday. It's October 4th. So it's the beginning of October. So I turn around and like to look at the month and say, okay, last month's over, bills are paid, everything's fine. Here we are in the new month, even though the new month started on Friday, but we turn around and say, okay, we wipe the slate clean and let's go forward. What happens is sometimes you look back and say, okay, if I had a small loss, medium loss, big loss the previous week, then I want to turn around, not only make that loss back, but also make back make that loss back and what I need to make this week. I don't focus on that. I focus on just what I need to make, or what I focus on. Typically, I set my goal high. I think as far as your weekly goals is, I'm pretty sure everybody knows what it is they want to do. But I'm a rather risk adverse. I don't like losing money, but it does happen. So I start with that, looking at where I was last week. What are the winning plays? How did I trade? How much of my emotion got into the trade, and was I able to control that emotion, or did I make irrational moves or judgments, things like that? How was my pre-market prep as far as, did I analyze the markets and technicals and stuff? And did I get a good read on what was happening for the day? And then I use this as to develop a trade plan for the day. The other thing that I also look at is I take a look at I pull up Barrons. I have a subscription to Barrons. I check this. I check this every day and also throughout the day. But I look for particular articles that might, this one was written on Friday the 1st, but I look for particular, things that might be able to, give me an edge or give me some information. So I scan, some of the topics as far as what's out there, and I look at, what might be trending or anything of that nature. But that's not a major part, but that is something. I also could take a look at the trade calendar that we have here. So this is the trade calendar. We are in the first week of October, and and as you see here, there's holidays, options, indexes, certain key factors that I look for. And as I see this week, there is nothing that's highlighted here. Now there is another website. It's called Market. I think it's Market Edge or something. Let me see here. Market Watch. And I do not have a subscription. This is a subscription site. It gives you really, really good information. But $1 for 4 weeks, and then after that, it's $29.99 a month. I guess for some people that might be. I feel that's a little pricey, but anyways. And then I turn around and I also, like, from there, I check the bond rate, because right now the bond rates are affecting what the markets are doing, but we are below 1.5%. We seem to be holding there. So, the Qs and NASDAQ should be able to stabilize. So those are some of the things I start my week. So that, because, after a weekend, I may have sat back and everything else. So, and then review my goals, review my trade plan, and some of the things that I want to do there. Check, get my journal set up for this week, all those good things. And then I get into my pre-market prep, and that's where we're at now. So let's take a look. And my prep today is going to be starting with the VIX. So we're going to jump over to the chart, and we're going to look at the VIX. Here we have the weekly chart, our long-term chart on the VIX. As you can see, we are in a range, trading in a range, but we're on the daily chart, we're above the 20. And I have said all this period of time, as long as we stay above the 20, the markets are going to be rather volatile. We're going to get swings up and down in the market that are probably bigger than normal. And so, we're in this range and probably going to chop right in here, but like on the daily 21, and maybe right up here to about 1 ATR, and so, or anywhere from here to the 25. We start getting above 25, all bets off. But again, as long as we're staying up here, we're trending higher on the VIX, which means that we are going to get those little pops from time to time. And when you look at the short-term front time frame, you see these big whipsaws. So the VIX is, it drops and then it whipsaws up. And so this is what gets people, and it triggers stop losses. Then the shorts jump in, and then the VIX drops, and then we've got a squeeze, and we just wind up getting chopped up. And so if you're looking at long-term plays may be tough. So right now I'm looking at everything as short-term. I am keeping my eye out for some good signals on a long-term. So let's go ahead and jump into the Dow. On still, we have we closed below the 21 on the Dow, and we are dropping lower. So this right here, if we close here on the weekly chart below the 21, then this is going to be, in my opinion here, we've got a trend reversal setting up here, possibly where the trend, the longer term, as far as the weekly trend, is going to be to the downside. If we want to look at a monthly trend, we can look at the month, and we'll see that we are still very strong on a monthly trend, on an uptrend. But with that being said, it, we could be this was COVID, March of 2020. Don't know. I don't suspect that we're going to see anything like that, but we could get a pullback, definitely a pullback here to the 1 ATR, possibly to the 21, and or somewhere between here and here. So we've got, long term on a monthly trend, we still an uptrend, but weekly trend. So we've got a reversal printing here, possibly on the weekly side if we close below the 21. On a daily, we are in a confirmed downtrend on the daily. So the way I'm looking at playing the markets right now is, looking at anything down here between 1 ATR to 2 ATR, we're looking at buying that dip and playing it back to the 21, and then turn around and shorting and coming back down and shorting. And when we short, I short the indexes. And we look at. Then I put some shorts on last week. I had shorts on Nike, and I had shorts on Dollar Tree, and we made some money on those, and we closed those out on Friday. And because again, short term plays right now, and things can whipsaw and change on you in a moment's notice, especially when they reach exhaustions and we started getting buy signals. So we exited those trades and we took our profits, and we got out. Let's take a look at the Russell. The Russell on the weekly chart is just in a chop fest. Daily chart is in a chop fest. Probably ideal for an iron condor, setting your wings out here, up here to 1 ATR, and the other side down on a negative 1 ATR, and looking at that as a potential play. And so we had some success on those. I played an iron condor on this day. I was going to put one on Friday. I'm glad I didn't, because would have got stopped out and everything on Friday. So it turned out to be, a good thing I didn't do that. Looking at some possibly either a butterfly or broken wing butterflies on these 0 DTE, or maybe out 1 week, possibly. To giving that some time to work. But again, that's what we're looking at on the Russell. We turn around and take a look at the S&Ps. The S&Ps on the weekly side. Let's see, computer's running slow again. We are, we closed just above the 21. The last couple of days we pierced the 21, and today we are dropping, in pre-market we are dropping just at the 21 or just below that on the weekly, and we are definitely in a confirmed downtrend. So if we close below the 21 today, that'll be our first day on a long term, and then we'll see what happens tomorrow. But we get 2 closes below the 21. That in my opinion will be, and that is, as my mentor John Carter has said, that that is a trend reversal, and so then that would change that on a weekly chart, where it is becoming more bearish. The market is becoming more bearish, which is what we were expecting in the month of October. So again, looking at, possibly anywhere's in this zone right in here, but like to see this closer to the 21, but might be looking at if we can get some possibly look longer term at some in the money call credit spreads, and figuring that we're going to go down lower, and flip flop that reward, risk versus reward, and So we'll be looking at some of those here today also. And then we've got the Qs. The Qs follow the FANG stocks, follow those. The Qs, we've seen some pretty sizable downturns, but we've got a really nice bear flag setting up right here. We had a bear flag here, pop back to the mean, we dropped. So this is the pattern we're looking at. Just it's a flip flop. It's from a bull flag. So this is the pattern we're looking at here. So on a daily, we're looking at a pullback back to the mean, to the 21, and short the rally. On the weekly chart, we have, we closed just above the 21. We are below it now. So the same setup here on the weekly chart. We close below here. And if we get another close tomorrow, or, we get 2 days in a row, close below the 21, then, we've got a confirmed long-term downtrend here. Right now, it is confirming this as far as our ADX. It's not looking good for the Qs right now, tech stocks. So again, reaching some exhaustion levels. We do have a green ready down here on the daily chart. So we're finding some consolidation right here at this level of 14,700. So that's a key area. We'll keep an eye on that, see if we hold and we can get a bounce back to the 21. But I believe right now any buy signals we would get, just like this one here, this buy signal was very short-lived, and this is kind of what I'd be looking for. So looking for this same pattern here to set back up, and then we'll play this in the NDX and look at that. So that's what I'm looking for here today. My trade plan basically today will be to sit on my hands, wait for my pattern, wait for the setup to take a look. I'll be exploring some other things, running my scans, looking for some honey badgers possibly, but for the most part, I have zero risk on the market right now. And that's the way I'll probably play. And if I do put risk on, it's going to be very, very small. And we'll be looking probably a little longer term. But if I take short term, I'll be looking at extremely small risk, $50 to make, I'll risk $50 to make 300 or 400. And, so kind of lotto trades. But we'll see if we can nail a couple of those here this week to make up for last week. But that's the way I'm looking at playing this market right now. And with that being said, you guys have a great day. We will talk to you tomorrow.